Hi, good morning, friends. I have an update regarding a company called Brigade Enterprises. It has launched Eterna in Yelahanka, Bangalore. It is a commercial residential project. So the project spans across 14.65 acres of land. It's Brigade Enterprise is an infra project developer or a residential property developer. So total area is about 2 million square feet across 12 towers with two basements plus ground plus 13-14 floors each. So the Brigade Eternia project has a revenue potential of 2,700 crores to be completed by March 31st, 2030. So exactly 5 years period. Brigade Eterna offers a range of 3 BHK, 3 BHK with study and 4 BHK spacious homes catering to the diverse needs of the market. Each home is thoughtfully designed to provide comfort and luxury with expensive decks and flexible home office study spaces. The managing director, Mr. Pavitra Shankar, said North Bangalore, particularly Yelahanka, is emerging as a key micro market with immense growth potential. We are thrilled to be launching the Etena on the last major land parcel in the heart of the Yelahanka, and this is one of the best locations for a residential project of this scale, especially in recent years. By providing a combination of luxury, convenience, and community focused amenities, we offer an excellent option for potential home buyers in the region. Brigade Eterna's strategic location allows easy access to schools, hospitals, and office spaces. The project boasts a wide variety of amenities designed for all age groups. A green entry tunnel with a ficus court that provides beautiful shaded walkway, enhancing aesthetic appeal of the project. Additionally, the project features an iconic expansive open window facade and 35,000 square feet clubhouse premium amenities. Okay, you can ignore this part. Alright, you can ignore this part. Alright. Okay. So the company subsidiaries are Brigade Tetrag Private Limited, Brigade Estates and Projects Private Limited, Brigade Infrastructure and Power Limited. Strength: the company has demonstrated a good profit growth uh, of 30% in the last 3 years. Company has been maintaining a healthy dividend payout of 22%. Debtor days have improved to 37 in the last 1 year. Reserves have increased from 3,418 crores to 4,900 crores. This is a period of 18 months. Debtors have improved down to, okay, sorry, it's a repeater, it's already been mentioned there. Inventory days have improved from 8,486 to 2,498. So maybe the inventory that was held was being held and remained unsold for a long period of time, which is the reason why there was such a high number of inventory days. Now that has reduced down in the last 2 years. So all the property that was unsold seems to be have has been sold, and the inventory management is much better now. Maintain an effective operating margin of 24%. Stock is trading at 4.45. That is the limitation. Low return on equity. The last 3 years of 7.3%. Borrowings have increased about by 700 crores, leading to addition of interest charges. Possibly that could reduce with the better working capital and reduced inventory. That borrowing may be offset soon. They would be able to see an improvement in the next 3 to 6 months. Total liabilities have increased to 10,000 crores again. It is a sort of concern, but let's see. The inventory has reduced, so liabilities should also reduce. Promoter holding decreased in by 2.45% in the last 6 months. Industry average is 37, stock P of 36, book value 211. It's trading at 4.44 times its book value, current price 938, return on equity 12.7% and 11.7%. 32% growth in the last 12 months, 36% in the last 3 years. Promoter shareholding 14, public holding 15, FII is 20 and DII is 23, so which is overall a good ratio. Return on assets 16%, quick ratio 0.44 and current ratio 133, earnings per share 26.4 TTM in the last 12 months, inventory turnover ratio 0.33%. This is because it's a large scale projects being introduced by the company, selling them phase by phase and investing money in constructing the building and uh, were purchasing the building outright and also paying government the development costs and the FSI costs could lead to a lot of investment in a project, and the project doesn't get sold immediately, so the inventory turnover ratio would be low, which is sort of okay in this kind of a project range. Then it impacts the overall profitability. So smaller projects tend to finish quicker, tend to have a better realization, tend to give a better inventory and asset turnover ratio. So long-term debt to equity of 0.35, total debt to equity of 1.05, asset turnover ratio 0.35%, market cap of 22,900 crores, has been declining due to underperformance compared to the sector. A sell call from Markets Mojo and a recent decline in the BSE Realty Index are the key points that impact the performance of the company. Sector underperformance. Sector is currently trading below its moving averages. So Markets Mojo have given a sell call. Realty index decline. Uh, so the index on the BSE Realty Index has been declining, which is one of the reasons also impacting the share price of the company. DIIs have decreased their shareholding, uh, which is again a negative signal sentiment for the market. Timing issues affecting collections. There has been a noted decrease in the total collections quarter on quarter, primarily attributed to the timing issue. So debtor days have improved, so this should also impact the collections as well. Decline in EBITDA, the company has experienced a decline in EBITDA. Established in 1986, property developer, close to 4 decades of expertise, developed many landmark buildings and transformed skylines across South India and cities of Bangalore, Chennai, Hyderabad, Mysore, Kochi, Trivandrum, Gift City, Gujarat, and developments across residential, office, retail, and hotels. Completed 250 buildings, 70 million square feet of developed space in residential, office, retail, and hospitality sectors across Bangalore, Mysuru, Chennai, Ahmedabad, Hyderabad, Cochin. As per property equity data, housing sales in Bangalore fell 9% to 60,000 units in 2024, uh, from the 66,600 in FY23 or 2023. Market position top 10 is listed in the top 10 by market capitalization. Served 40,000 customers, completed 280 buildings, 86 million square feet. Okay, so I think this is an updated version from the previous commentary that we read here. So, real estate sales 72% divided into residential, commercial, lease, hospitality, ongoing projects, 22 million square feet of sellable area, 21 million for residential, Upcoming launches 16.09 million square feet in FY25. This will comprise of 12.61 million square feet residential, 2.983 million square feet of commercial space, and zero point 0.5 million square feet of hotel space. Land bank distribution. Company has a total land area of 519 acres worth 3,000 crores. Bangalore, Chennai, another total developable area of about 56 million square feet, with 55% in Bangalore, 34% in Chennai, focusing on Bangalore, Chennai, Hyderabad for the acquisition of suitable land parcels. Company is expecting a 30% growth in sales booking in FY25. Brigade Enterprises anticipates continued growth in the residential real estate sector, with housing prices expected to rise by 5% in FY24. So, with the rising prices in um, FY24, there has been a drop in the number of units sold in Bangalore. Sales were projected to increase by 9%, however, they haven't increased the way it was expected. This is the company internal forecast, not a market forecast. Uh, so about 10% increase in construction costs in FY23 due to higher inputs, leading to 5 to 6% rise in blended costs. Larger, well-organized players with strong brand and equity and financial stability are expected to perform well in FY25-26. Plans to launch. So we've been through some of this information already. Okay, so let's look at some other financials. This was the price as of yesterday, or rather this morning, 9:31. Overall, 3% down in the last 5 days, 4.3% in the last 1 month, 31.5% down in the last 6 months. Overall, in the last 1 year, 9% positive return, which is a good sign compared to the overall market trending due to the last 1 year. This is the logo of the company. This is one of their buildings that it had developed. Another building that the company had developed. This is another big project that the company had developed recently. Another building picture view. Sorry, excuse me. So this is December quarter, 1.46k crore. Uh, then you can see net income of 236. So net income has increased, revenue has increased, diluted NPS of 9.95%, which again is an increase year on year. Net profit margin 16%. EPS beaten by 75%. So overall good sentiment. 1 month return minus 3.8, 3 month return minus 27%, previous close 936, high of 1453, low of 1827, market cap 23,000 crores, PE ratio slightly lower, 36 is reduced to 34, PEG ratio 2.5, price to book value of 5.12, the current ratio is about 4.4. This probably is the update as of FY24. Uh, so mutual fund holdings uh, for 6, 7, 10, about 12% mutual fund holdings, which is a good number, substantial number in the industry. Rating, again a rating by 12 analysts is to buy, 0% for hold, 0% for sell. Target price of 1435 by an analyst, upside of 50% expected. This is a forecast by 12 different analysts, so target range of 1435 possibly within the next 1 year. The source is S&P Global Market Intelligence. Project governance update 2700 crore project that we just discussed about. Foreign institutional increased holdings from 18 to 20% in December 2024 quarter. This is the positive news for the industry. You can see revenue from 1.072, it's gone up to 1.46 crores, 1.46k crores. This is income point of view. You can look at the different quarters. The Q1 24, that is the June 2024 quarter result was the best, and the company has not been able to match that kind of revenue and growth, which is the reason why the stock has been correcting. Okay, promoter holding 41, foreign institutional investors 20, mutual fund 21, retail investors about 15.5%. Then return on asset 4.25%. So it's low compared to the amount of investment value. That is something that we'll have to look at. Smaller projects to be completed in a smaller time range and time horizon that would possibly drive better growth and performance from the company. Overview, you can see valuation. Uh, Highest was 151 in April 2022, and the lowest was 17th of November 2021, minus 20. So I think probably in the year 2021 there was no business and there was no offtake of any projects. That is the reason why the valuation went down. That could be the only reason. Due to the COVID pandemic, then the results jumped to 21% for Q3 F4 24 and 25. Though it has generated net profit in the last 3 months, still the market sentiment remains negative. Maybe whatever losses that it held in the last few months, it has managed to correct them and reduce them. Dividend in May 2024, 21% dividend of rupees 2, 2 rupees dividend. So analyst view, so analysts suggest buy, NBCC hold, Rail Vikas Nigam, they were advised to sell. So there are some others that you can compare. Market cap, you can see the 5-year CAGR. So you can see Brigade 84, NBCC 114, Rail Vikas 385, Sterling and Wilson Renewable Energy 18.5, Mahindra Lifespace Developers 45. So we've had a look. Dilip Buildcoin 12. This is the lowest from Dilip Buildcoin. However, if you go to look overall uh, revenue growth, we will have to look at it in the last 1 year perspective, because this space isn't going to grow very fast. So performance would need to be looked on quarter to quarter basis and year on year basis. And since the projects can take in the range of 5 years, there would be limited projects that come up for development. There will be more projects that come in for redevelopment in major cities and metros. So that is the only way the company could focus on growth. Maybe you could look at companies which can offer better value on projects with redevelopment. Those projects can take a long period of time as well. So that is something that needs to be kept in mind while considering the industry, considering a specific stock. So one of the important aspects here would be not just the residential projects. It also depends on any projects that it takes up, like construction of a hotel, construction of a office space or office building, or a project for development of a certain building for a particular company. So those kind of big projects with big value may be better better valued. Why? Because the possibility of getting better returns and getting better inventory management would help the company, as it will be a large project built specifically to one company or to one corporation or to one large entity. So managing and getting value out of that project would be better and faster as well. So let's move on. You can look at debt to asset ratio, net profit 400 crores, yearly revenue 4,500 crores. So this information is more valuable. 10,500 crores in BCC, net revenue profit is 414 crores. Performance wise, you can see Brigade Enterprises lower revenue, same amount of net profit than Rail, because better profit, better revenue. Then Sterling minus 211 crores, revenue of 3,000 crores. So something that may not be something that you would be considering. Mahindra Life Spaces, revenue of 200 crores, net profit of 98 crores. So better value to the amount of investment in the project compared to the sales. Mahindra Life Space Developers has a better return on capital, and though the revenue base is small, chances of better profitability and uh, increase in long-term growth of revenue as well possible. Dilip Buildcoin net profit 200 crores out of 12,000 crores revenue. So Dilip Buildcoin also not doing that well. However, analysts have suggested to stay put in the stock, keep keep invested. So here you have PNC Infratech. It's a buy call. Uh, Market cap, you have 6,600 crores, and CAGR 16%. So CAGR is low. Engineers India Limited 9,000 crore, 36% CAGR in the last 5 years. That doesn't seem to be so bad. IRB Infrastructure 115 CAGR, I think that's the best. So that is a good buy rating call. Embassy Developments Limited. Uh, Again, it's a buy rating, though the CAGR for the last 5 years is not that great. Then we look at, you can see profit of 900 crores for PNC Infratech, revenue of 8,500 crores. Engineers India Limited, good good profit generated with 3,280 crores. KNR Constructions 752 crores, and overall 4,500 crore revenue. So then moving on, IRB Infra, not that profitable. However, revenue growth is good. So chances of better revenue growth could also result in better profitability of the company. Suntech Realty 70 crores profit, revenue of 564 crores. GR Infra Projects, you can see, is one of the companies we covered in a video earlier today. It shows 1,322 crore profit and the revenue of about 9,000 crores. So, goodbye overall period of 3 to 5 years and possibly a longer time horizon. Then some other companies for you to look at. 94% CAGR in 5 years. Shobha Limited, good. NCC again 159, 5 years again, seems to be a good rating. Rights suggestion of hold. So we've been through a lot of information on this. You can read through this. We've already gone through some of the information here. Then net profit, you can see market capitalization, revenue. We've covered all these points. It was listed in 31st December 2007. Market value capitalization 23,000 crores, 52-week high, 52-week low. Volume of shares traded yesterday was about 8.63. So again, major of the shares that are being traded for this something related to public. The FIIs and DIIs volume is stable. Okay. Brigade Enterprises share price 931 down 35-36% from its 52-week high of 1453, up 12% from its 52-week low of 827. So chance of improvement in the stock very soon. These are the return figures in the last 1 year. I think that is it for today, friends. Thank you for watching. Please share this with your friends, family, and associates, whomever may benefit from this information. Please share your comments with any positive feedback and also feedback to help improve the overall content shared. Thank you. Thank you so much. Have a great week ahead.